Hi, Warriors. Here's your Wednesday update. I've been talking about 103.80 as being critical, both the 103.80, 104.20, and the Dixie. Yesterday, we had the close in the U.S. session under 103.80, close at 103.77, so that was enough to qualify. We'll see what this turns into. If you're trading this breakdown, it is a sell signal. You could either protect yourself with closes back over 103.80, or if you want to have a fail-safe stop, we shouldn't be seeing this again unless it turns out to be a false breakdown. So we have the stop hunt almost complete here above these highs. You know, part of me is still not impressed, but you have to go with it. And from 108, call it 108.60 or 108.80, you're talking about 110.80, 111 as a possible target. If this is a continuation move, 160 from here gives you 110.20. So we'll see. Obviously, back under this resistance was resistance 860, would change a picture, just like the dollar index, which is, 30 pips off the breakdown at 103.80, closes back above it, change that. Um, I still believe that I'm going to have a chance to buy this Aussie. I'm not long the Aussie. I'm going to stay patient and see how long this dollar sell signal runs. Maybe we're going to do some type of ABC here. It could take you up to 66, but I still believe at some point I'll be looking at a 64-cent Aussie that I'm going to be very interested in trading. You're getting a breakdown in yields too, which support a falling dollar. Here you go. 420 was the number, and we broke down yesterday under 420. There could be some support levels here, but if you look at this right now on a daily, you have to say this was impulsive and this is corrective. And we never even got to the 50% level at 440. And the only thing holding it right now is this 50-day. We're under the 200-day. And this portends lower yields. We'll see what Jay Paul has to say today. He's going to be on the Hill the next couple days. Will he be nice Jay or mean Jay? Is he bipolar? Is he Arthur Burns? Is he Paul Volcker? It seems like the market really isn't paying attention to him. He went on 60 Minutes and talked about higher for longer, and this was the pop in yields on that show. And the market, which is bigger than any man, I don't care if they're central bank chief or not, has already taken away the gain in yields. So we'll see. This looks pretty negative to me. And with that happening, perhaps we're not going to get the stop hunt in U.S. dollar yen. It's acting pretty negative here. Looks like a top to me. And, it goes along with the dollar breakdown, that we would have a yen breakdown. I do want to touch on the risk off that we had yesterday. Okay. I know I've talked ad nauseum about Apple, right? Still no bottom in sight the way it looks to me. But what I did start pointing out last week was the rising wedge in the Dow that we had a little bit of a breakdown from. And if we go to something intraday, let's see if it's testing the breakdown. It actually got to the breakdown here at 38,900. Maybe not a bad place to sell, because I still think the minimum of this correction in the Dow should take us back to the anchor of the wedge here, which is 37.3. So I'd be selling this rip with stops over the high of the move, which was 39.3. Okay. Also, I talked about a head and shoulders top last week in Microsoft, and that was here. And we had another rally up here to form a complex right shoulder or I'll give it a new term. We'll call it Quasimodo. Right shoulder, neckline still coming in a shade under the 400 level. That's going to target 380 or lower. So that's something else that has followed suit. The Dow, I talked about it was really a classic chart of the divergence going all the way back to mid-December into March. So could we have another push up? Sure, but I think this is a decent time to sell this pop and risk it. We're underneath the breakdown, as I showed you with some interday stuff. We poked through it a little bit, but between here and 39,000 with stops over 39.3, I think is a decent shot for another move to the downside. And as I talked about yields, gold and silver keep marching. Silver's acting a little better today. Gold-silver ratio coming off a bit. Not sure that it's peaked yet. There still could be another run. And while gold is pushing new highs here, I actually took a short scalp yesterday that fortunately I booked partial profits +7. Silver was the better short. Silver's not making new highs here. In fact, this 24 area is pretty important. So, if you want to take a shot at some shorts, you could short the silver here with stops over the high of the move, which on the 2-hour did diverge, and it's acting much weaker than the gold, with the gold pushing up at new highs. Now, these are just trades for now. They're not positions. I haven't let go of minor positions. Those are positions. These are trades, and silver would be the preferred short. I believe that I've covered everything. We still have the dollar working lower again. Just your takeaway, closing back over 103.80 would negate the signal. So you have to at least give it that and see how much we're going to get to the upside. And also Aussie, that I'm still waiting for 64 to happen, this big wedge that I have down here. See if it shows up on the daily. Yeah, actually, now it's going to be coming in underneath. It's going to be coming in more like 63.5 if we go back here. If Aussie gets through, and it's been the weak sister, 66, it's going to look pretty good. But, something else I talked about the day before, on Monday, was the yen crosses. And I talked about how much weaker the Aussie yen was compared to Euro yen, which are closer to the highs, and the guppy. So I'd be careful. People have been long a lot of the yen crosses right here. If the yen's stopping, it could be a big move. If yields have broken down and we're heading back down towards 380 to take out that low, the yen is going to have some problems. So I'll see you in the room. Don't just count your pips, count your blessings, and be disciplined. And if you've been talking about a number that's going to be a signal for weeks, don't second guess yourself. Go with it. Know that that signal may not work just like every other signal, but you go with it. And when you get into the trade, so I know if I'm short the dollar from yesterday, I do not want to see it close back above that 103.80 level. And if I want to use not just a close only stop, but a limit stop back over that 104.20, it'd be something else is going on if we're back above 104.20. Then we're going to make a run towards 106. So before you click your mouse and get into a trade, you need to know 3 things. Why am I getting into the trade? That's your technical contingency, which tells you if that contingency is negated, like 103.80, I'm out. So I know what my risk is on the trade. I know why I'm in the trade, and I also know what I'm looking for a target when the trade is working, and I always take partial profits. That's more than 3, isn't it? Anyway, have a great day. Have a great day trading. I'll be back here with Mike tomorrow. Adios.